Hello all and welcome back. I hope everyone is doing really well. An interesting video today as I'll be looking at some new things happening across on Hedera. There's potentially some big ecosystem changes when we're looking at DEXs as well as opportunities across the ecosystem. I want to do a bit of a market update though and look at the fear and greed index at the beginning of this video. At the moment, we're currently sitting at a neutral 52. For those of you who don't know what the fear and greed index actually is it's a sentiment indicator effectively, which looks at whether the market is looking rather fearful and people are selling off their positions, or greedy and people are accumulating massively. And I've looked at this in lots of different videos. Previously, at the bottom of that bear market, we saw very low figures, sort of single digits in June of 2022. So at the moment, we're at a bit of a rebound from those low lows we'd seen previously. Although Bitcoin appears to be bleeding out at the moment, which is juxtaposing what the equities markets are currently doing in the States, as they've had some significant rallies recently with the Nasdaq and the S&P 500 performing fairly well as tech begins to rebound. And of course, a lot of that is going off those market macro indicators like interest rates and potentially the Fed signaling or starting to signal based off inflationary data that their hikes may be coming to an end and they may just continue to ride out that terminal interest rate that we're currently sat at. But of course, we'll see how this plays out. Typically, I like to either take profit from positions when we're in a greed zone and obviously heavily load up. That'll be like backing up the truck for me down in the red, the sort of the extreme fear zone. Neutral zone at the moment is a good place to sort of dollar cost average into those positions. And of course, some of the altcoins at the moment, like HBAR, are in a very good place. I wanted to share this thread posted by 𝗟𝗘𝗙𝗘𝗥𝗥𝗔𝗟𝗦 over on Twitter, as I do quite like looking at some of his technical analysis stuff. I'm not a huge believer in sort of TA per se. As I've said on the channel in the past, I'm more into my macro, but this is interesting nonetheless. Aging beautifully, this is exactly what we wanted to see here. The chop has lasted, i.e. sideways momentum, has lasted for more than a few weeks, which is good. The longer the better, but this correction soon may be coming to an end. How much longer till expansion and the bottom is in? 25k for Bitcoin is tested, liquidity below has been taken, and the bottom for this correction might be in, but we need to see how price action develops over the coming days. While we can't rule out a flush lower yet, developing price action will give us some more clues to work with. I expect the blue dotted trend line on the right to hold would mean less than 30 days for sideways phase to complete and the next move up to begin. Note, of course, this wouldn't be a hard invalidation, just a reasonable expectation. We can see the chart here. If we look, he's basically been signaling for a while, coming down to potentially about 23k, and then we may see a larger push towards the upside. And of course, going back to the cyclical nature of cryptocurrencies, Bitcoin will tend to run first. It will gather all the liquidity and capital. And then, of course, we'll see a trickle down effect as Bitcoin's performance begins to slow down into top tier altcoin projects such as Ethereum and others, hopefully like HBAR. And that's when we would start saying we're in an alt season and a real true bull market. Anyway, enough of that kind of market update. Something I wanted to look at today in this video is the diamond standard over on Hedera, and it goes in tandem with previous videos I've done about tokenizing assets on Hedera and one of its sort of superpowers per se, because of those low cost fees, fixed fees, as well as massive amounts of scalability. So 𝗏𝗏𝗏 and the diamond standard have been unlocking the investment potential of diamonds via tokenization on the Hedera network, creating a highly accessible, secure and transparent means of trading. So we can see the total diamond supply for investment is roughly 1.2 trillion US dollars. 50 million US dollars currently being traded on Hedera already in diamonds, and 2.5 million have already been tokenized via trading volume. Diamond Standard have chosen to build on Hedera because of its speed, security and transparency, which of course is very similar to majority of use cases building on top of Hedera. The Diamond Standard unlocks those barriers to diamond investment. So diamonds, everyone knows they are a precious gem, highly valued by practically every person in the world, and they've been proven to be enduring investments. They are limited in supply, while demand for them never ceases, so they are a great store of value. And unlike many other types of assets, diamond hold their value during periods of market instability, meaning that investing in diamonds can provide a great hedge against inflation and other economic risks. So of course, that's the asset itself. And what they've been doing is, of course, tokenizing this on Hedera. So here's an overview of how the token architecture on the Hedera network, where you have a visual representation of the different components of the system and how they work with each other. So here we can see effectively what's happening. You've got peer-to-peer marketplaces with user accounts holding different assets, BCC, BCB, BCT, and USDC. USDC token is underpinning a lot of this. You've got this 𝗏𝗏𝗏𝗏 contract, which holds the custody tokens, mints and operates the 𝗏𝗏𝗏𝗏𝗏s. And obviously a user can interact with these as well as the peer-to-peer marketplace. You've then got other things going on as well, asset tokens. So you've got user accounts interacting with that, custodian accounts and custody accounts for the token contracts. And effectively you build this system where you mint these diamonds, so to speak, but of course being backed by a physical real world asset via something like an NFT. And then users via the marketplace can obviously transact these diamonds fairly seamlessly. And we can see this if we scroll up here. So the diamond standard initially obtains diamonds from a worldwide network of vendors, including smaller vendors that may not have the same access to larger diamond market. This gives them an equal opportunity to participate. Next, an AI system, as well as a machine learning algorithm, are utilized to evaluate the cut, color, clarity, and weight in carats of those diamonds to determine which ones will continue through the process. The selected diamonds are then sent to the International Gemological Institute, or the IGI, for final inspection and certification before they are organized into one of the 2 standardized collection types and securely packaged in individual tamper-proof containers. These containers are either referred to as diamond standard coins or diamond standard bars, where all coins have the exact same value and all bars have the exact same value, meaning they can trade at the same price, which of course is critical for investor confidence. Each of these containers has an embedded computer chip that stores what is called a commodity token. This then supplies the information needed to tokenize them on a distributed ledger. To tokenize on the Hedera network, the Diamond Standard uses the Hedera Token Service, or HTS, which ensures that the diamond commodity token truly represents either a diamond standard coin or diamond standard bar, and the ownership of the diamond commodity token is directly linked to the ownership of the physical diamonds. Once this is done, investors can then buy and sell diamond commodity tokens as a digital asset on exchanges. This, of course, allows others to invest in diamonds without having to physically own and manage those diamonds themselves, store them, make sure they're safe, etc. I guess this is similar to if you bought gold bars, you then need to find some way to look after them, prevent them from theft, and you might then pay a custodian like a bank to hold them in a vault or something like that. This cuts out all of that kind of middleman sort of shenanigans, because these guys are holding them yourselves and then you're trading them on this secondary market and you know exactly what you hold. And I guess as well, they're probably redeemable as well if you wanted to then redeem those diamonds for the physical asset itself. The Diamond Standard then uses the Hedera Consensus Service to create a completely secure record of all those transactions as well, involving the diamond commodity tokens, ensuring transparency and immutability of all activity of tokens. So this is a classic case in point example of what I've been talking about a hell of a lot over the last year or so, of what we mean by sort of real world value and tokenizing those real world assets. In this case, they're doing something in terms of precious gems, and you could tokenize any other kind of commodity as well. But what's interesting here is the fact that they've already done $50 million of trading volume on Hedera, $2.5 million of diamonds have been tokenized, but the total market cap for diamond supply for investment is $1.2 trillion. And of course, there are tons of other commodities that could be tokenized on Hedera in a similar manner. And you're starting to see the real money flow across into the chain because of the sheer capital that exists within these current markets. And it's Hedera's innate ability to tap into these different markets that could see it become incredibly successful in the future of tokenizing assets. And again, we've seen this with council members like DLA Piper that have been tokenizing different things as well. Some new news as well: the Hedera Governing Council meetings have just been taking place, and they are taking place at the GC member Google Cloud's headquarters in California, and they look forward to sharing more details with the community and beyond, showcasing what responsible governance looks like in Web3. And some interesting images here, of course, Lehman speaking, Google event headquarters, the public ledger for enterprises, of course, a key slogan of Hedera there, but some interesting stuff that's being held at the Google Cloud headquarters themselves. Talking about what I mentioned at the beginning of the video then, SaucerSwap Labs has released a big announcement saying that Source Pro is coming soon with 5 different key features: account overview charts, personal AI assistance, CSV exportable transactions, early access passes, and per minute price charts being available, payable exclusively in the Source token, which further provides utility to that DEX token. And we'll look at some more information from this Medium article here. So Source Pro is a software as a service model that offers advanced features to users through an affordable and high value monthly subscription paid in SaucerSwap's protocol token Source. This service enhances the first-in-class UX of SaucerSwap by providing an optional feature set for active users of the platform. So user-specific transactions, So SaucerSwap maintains a record of all those transactions, and you'll be able to basically export those as a CSV file compatible with popular crypto tax software such as 𝗟𝗓𝗡. This breadth and granularity of data will streamline accounting and empower users who wish to do further trading analysis in third-party software. This is a big one actually, because I've had tons of different messages over the time since native staking and all sorts of different things came to Hedera, as well as when the DEX is released, of how to basically track this for accounting purposes. Well, this is your answer. The SaucerSwap team are effectively building something to help you do that. Overview charts with 1-minute price data as well. With the Pro, you'll unlock high-resolution 1-minute price charts. Of course, this will probably be the integration potentially via TradingView. I have no idea. Maybe I'm making that up, but nonetheless, that's also pretty interesting. The AI assistant is something interesting as well. SaucerSwap trained OpenAI's ChatGPT on its Gitbook documentation. When a user inputs a query into the help modal, SaucerSwap's entire documentation is scanned and a simple semantic answer with clickable references is generated. This builds on the strength of SaucerSwap's customer support, giving users access to information about concepts in DeFi and their application to the DEX. So this is brilliant if you want to understand things like what's in permanent loss, or how the liquidity pools are functioning behind the scenes, or what the incentives are for holding the source token. You could pop some of these into the chat modal that will pop up, and of course that will use OpenAI's language learning models to scan through the Gitbook documentation. Early access passes as well, so another perk of Source Pro, similar to the historic utility of the Planck Epoch NFTs. Of course, we're all still waiting for the replacement set to come for enhanced staking rewards, but users may have the option of staking XSource in community pools a couple of days prior to the general public. Lucrative APRs, beta approach also allows core maintainers to deploy bug fixes, etc. Some neat features there they'll potentially bring out in the future. And then of course, future add-ons on top of this as well. They'll keep exploring to upgrade the Source Pro features. So interesting, no information yet on prices. I'm sure it's not going to be crazy expensive, but could be of benefit to some of you, particularly those CSV exports and the like. Bit of a PSA for anyone that uses Ledger. May not even be necessarily with Hedera, but across different ecosystems. The Ledger co-founder and former CEO has admitted that governments can actually subpoena access to your funds if you use the new Ledger Recover service. So to play devil's advocate, if a subpoena was issued to Ledger or to a third party by a government, could they use Recover to access the Ledger without the customer hitting a button or knowing about it? And they responded saying, if you are a Recover user and you have your shard into safeguarded by third parties, then yes, a government could subpoena them and get access to your funds. Using Recover gives you an easy recovery option and mitigates backup loss, but your assets could get frozen by the government in theory. And that's because effectively you're handing over those keys to the recovery service in order for you to recover this. And this speaks volumes about a recent video I did about not decentralized identities, but decentralized recovery, or DREC, which was a novel idea by Lehman himself. There's a dedicated video on the channel looking at that and why that solves a lot of these, sort of recovery features which aren't decentralized or in a non-identifiable way to protect it. Two tweets I wanted, or headlines I wanted to round up the video on then. The White House has said the stock market will crash by over 45% if the US defaults on its debts. Now that would be incredibly interesting to see, and maybe, just maybe, we'd see the correlation between the crypto markets and the equities markets actually break in this instance, because of course majority of that is being fueled by debt. Potentially as well, majority of the crypto markets are likewise. However, I'd like to think alternatively to that crypto may be seen as a better store of value because it maybe isn't being manipulated by sort of central banks and governments via extensive macroeconomic policy. Although interesting to that, to juxtapose it, Biden has then said he won't agree to a debt deal that protects crypto traders, which of course, again, is very interesting indeed. And we'll have to see how this plays out. I don't believe they're going to miss the vote on the debt ceiling. They'll probably just increase it like they have done so however many 100 times in the past, because that is, of course, how the US financial system works. Anyway, guys, hopefully you did enjoy this video. If you did, leave a like, drop a comment if you've got something to say. I do try and respond to as many of them as I can. And until then, I'll catch you in the next one. Cheers.